Because of the craziness last year, everyone is searching after the next big thing. Everyone is trying to find the next Tesla. Everyone's trying to find the next Zoom. Everyone's trying to find whatever it is that might pop next. Everybody's trying to chase after the next big thing. The problem is when it comes to investing, chasing after the next big thing causes you to miss all the things that are currently in front of you. It causes you to miss some of the more boring, but actually better companies that are right in front of you. So in this video, I just have a clip from one of my favorite investors. His name is Peter Lynch. I love all of his books that he's written. I have a bunch of them. That's why I'm looking over there. And he just talks about investing in such a nice and succinct, matter-of-fact way that I just had to share this little clip with everybody so you can understand when it comes to investing, it's not about chasing the next big thing, but more than likely, it's just about buying into the things that you already have in front of you. So let's watch this clip real quick.
You still believe in the investment mantra that you were often credited as your mantra, which is invest in what you know.
Yeah, I'm amazed if somebody, imagine you spent you a long time in your field,
yes,
in my field. Imagine if you were in a mall the last 30 years.
Yes.
You would have seen The Gap. You would have seen Best Buy. You would have seen
exactly
Circuit City. You would have seen these companies that are crowded doing something better. And they're buying biotechnology stocks or oil companies. It makes no sense to me. If you're in the steel industry, you see it go from awful to better.
Yeah.
Why don't you buy a steel
Yeah, but we
stock?
expect mutual funds to know that stuff. No, obviously.
Well,
I mean, if you're managing,
but they're ahead of us.
You know, if you look at Magellan or you look at BlackRock, you think they must have access to the best information in the world.
But they don't have that. They're not in the steel industry. They don't see things get better. You know, the way they don't see the chemical industry turning as soon as the people in the chemical industry do. I mean, you could be in the plastics fields or lithium, whatever it is.
People in the business see it first,
and that they see it first. Or they
but
in a mall.
Go ahead.
In a mall, imagine the companies you've seen, the Dunkin' Donuts. It goes on and on. Walmart, you know, Stop and Shop. These are all companies that really got better. Somebody said, "Gee, I'm shopping there." But I'm not saying people should. If they want to invest, they ought to do the same kind of research they do when they buy a refrigerator. Right. They take a trip to Italy. Do some homework.
You know what is?
Oh man, it's so good. Let me take these headphones off. But it's so good. Just the point he made, and just to like put an exclamation point on what he said. Not that he needs me to do that, but let's just take a walk down memory lane. So this is Domino's. Domino's is pizza delivery company. We all know Domino's. It's a boring company. Nobody's checking for Domino's. Everybody knows what Domino's does. They try to deliver your pizza as fast as possible. They make okay pizza at the end of the day, but they try to do it very well. Domino's, I remember one year I was in school and Domino's introduced this feature where you could track the steps in which your pizza will get to your house. So you could see when your pizza is being put into the oven, your pizza is being taken out of the oven, your pizza is being boxed up, your pizza is getting ready for delivery, all that stuff. It was cool. Like in college, it was the greatest thing to be able to know when you were about to get your pizza, right? It was awesome. Domino's stock, if we look at it, in the last 10 years from 2000, let's just go from April 2011, Domino's stock has gone more than 2,091%. In other words, if you invested $10,000 into Domino's, you would have $200,000 now. And that doesn't even include the fact that you would get paid dividends on that money as well. So my thing is, everyone keeps chasing after whatever the next big thing is. And in fact, not even to cherry pick. Let's go to another stock that everybody loves. Chipotle. I remember when we were in high school, my friend Kenichi used to tell me about Chipotle all the time. He would say, Chipotle is good. We should go to Chipotle. I used to hate Chipotle. I'd be like, why would I go to eat Chipotle? All this other stuff. I remember when I moved to North Carolina. In North Carolina, there was a Chipotle that was about to open up. Everybody was freaking out about it. I did not understand it. But if I was an investor at that point, that would have made me go, something is going on here. Because around that same period of time, 2017, 2016, Chipotle's stock was falling. But if you knew something about Chipotle, if you understood Chipotle, then you'd have been buying in during that time. Because since that point, when Chipotle's stock fell from $700 down to about $428, Chipotle has gone up 300%. In other words, if you invested in Chipotle, you'd have made 3 times your money. That's amazing. That's unbelievably amazing if you are able to do that. So my point is, all I'm trying to share in this video is buy into companies that you know and you use. You don't have to go chasing after these risky bets, these SPAC companies, these companies that have no revenues, that may have a future. You don't really know. You're just buying into it, or into things like SafeMoon and Dogecoin and all these other altcoins. You don't have to go chasing those things to get some kind of good return. You can literally invest in businesses that you eat their products on a daily basis. One of the things he said in the clip is if you work in an industry, you should probably be investing within that industry because you know more about that industry than other people. You know more about those products. In this day and age, one of the things I like investing in boring companies. Now for me, boring companies are companies like Microsoft. People think Microsoft is a boring company now because there are companies like Tesla around. So Microsoft is like, nobody cares about Microsoft. But investing in boring companies can be one of the best things you do because they have a defined role already. They already have cash flows. Being boring is one of the greatest things that Apple did when it made the iPhone. It made that thing so boring that people who are tech nerds were like, why would I buy that thing? But that was the thing that was the catalyst that made the iPhone so successful in the future. Because it was boring. Boring equals simple to use. Simple to understand. I want to share one more clip from this video before we get out of here on just another benefit of you buying into these safe companies, into these boring companies. I just want to share this clip real quick.
You're nice enough to say nice things about Magellan, but in those 13 years, 10 times it declined over 10%. You know. And
but your point was that you were confident enough to say, when it's declining, to know when to give up and when not to give up most of the time.
Right. I'm saying when the market went down, I would always go down. So
Sure. But you wouldn't go scared because you'd invest in a company.
That's right. I'd just say if the company's fine, it's fine. I mean, basically, Johnson & Johnson's higher than it was 40 years ago. Their earnings are higher. Xerox is lower than it was 40 years ago. The earnings are lower. So
yeah, of course.
It's what happens to the company.
That's the other thing that I wanted to share with everybody. When you invest in businesses you don't make panicked emotional decisions. Because you're like, this company is still doing well. I still see people going to Chipotle. During this time, if you were going to Chipotle on a regular basis and you were seeing people always going to Chipotle, or just hearing your friends always talk about, where are we going to go eat? You know what? Let's go to Chipotle. That was actually a regular thing. You wouldn't have worried about the fact that the stock was falling. All you would have focused on is Chipotle. I know people are still going to Chipotle. This just gives me an opportunity to buy this stock for cheap. And then you would have been rewarded on the backside of it. So my main point that I want to share is buy what you know. Don't worry about all the fancy stuff that's going out in the world. Buy into companies that you use their products, that you understand how they work. Not to say that you don't actually do the research to see how they're making their money and all that other stuff, but you buy what you know. You do your research to understand how they're making their money, or rather you do your research into understanding their financial positions. Because at the end of the day, even if you buy into a company, if they're not making money, it's a waste of time. But start there. Start with companies that you know rather than trying to find other fancy, schmancy words being thrown around to make an investment. But anyway, that's all I got for y'all. I hope y'all learned one, maybe two things out of this entire thing. And if you did, hit that like button. If you enjoyed it, hit that subscribe button. But I'm going to catch y'all up on the next one. Remember, generosity is always greater than greed. God bless each and every single one of y'all. And I'm out. Peace. Whoosh.